Exactly 12 months ago, I purchased 3 investment properties which I covered extensively on this channel. Now what I want to do is go back and look at those numbers, see how they've performed over the last 12 months, and where I expect the growth will be in the next 24 to 36 months. In addition to that, I'm going to share a couple of secrets around what I'm doing right now, so if you're interested in what my thoughts are, then definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, if you are interested in knowing how a buyer's agency can help you go and execute at speed, buy numerous properties and build a portfolio, definitely go to our new website, which you can check out in the link in the description below, because hey, it's a great website. I want you to check it out. And at the end of the day, if you need the help to execute on deals like this is the one place you're gonna find them. So on the 26th of January, 2023, I made this video. And if you haven't checked it out or you're new on this channel, I would say pause this video, go and check out that video and then come back to this because it's a before and after. And we've all seen the block. Who doesn't like seeing the final images of a new room reveal? You see the dilapidated property and you're like, hey, that looks like crap. And then all of a sudden you see the after and you're like,
that's a wow.
Now, why it's really important to go and watch that video is because at that time, we had just come off a year where property prices actually fell in Australia. Nationally, we had dropped by about 7% and there was so much fear at the time. Consumer confidence was low, everyone thought the property market was in a bubble and we will continue down lower. In addition to that, we had uncertainty around the interest rates, and at that point, they actually ended up going up a couple more times in 2023. But despite all of that, I still went out, purchased property, and I knew that I was going to expose myself by making a video saying, I'm buying 3 properties, look at me. And if property prices did fall over the next 12 months, I'd look like an absolute idiot. I always told you I was going to make a video and update my numbers, and to my surprise, they've been absolutely crazy. So let's go through the numbers and see what they're at now. Now, I purchased 3 properties at the average price point of about $400,000. I was just looking at houses at the time, and I looked at purchasing across 2 states where I wanted more exposure. The average yield was 5.6% at the time, which meant the total assets across the 3 properties was $1.2 million, and the rent I was receiving was $1,280 per week. I also went on to say at that time that because interest rates were high, the properties themselves would be negative cash flow, which they have been for the better part of the last 12 months. And I also said I'm not really worried about that, because the amount that their negative cash flow was like less than $100 anyway, and for me, I could weather that storm knowing even if interest rates went up slightly, which they actually ended up doing, I knew that the rental growth would be amazing because I knew what the incoming supply looked like for those particular areas. Now, while most people go on to say, well, property prices can never always go up, and even if the numbers look good, it's probably not going to be 7 or 8%, it's more like 3%. And if it's 3%, is it even worth it? I did cover this off in that video where I said, look, conservatively, 5%, I'll be very happy. On average, for all of our purchases, for all clients, we say 7%. You'll see it all across our Instagram. You should definitely go follow me. You could probably see something scrolling here showing all of the deals that we showcase on the Search Property AU page on Instagram. And I always put 7%. Now, when I put 7%, some people question me and say, well, how are you getting this number? And I'm like, well, that's actually our baseline case, because some of those properties we expect will grow at 9%, some maybe at 12%, and some maybe even greater than that. So I thought, hey, I'm going to show you exactly what this looks like, be completely transparent with you, and I practice what I preach, which is very important in a time like this, not to be getting advice or guidance from someone who did this like 15 years ago. It was so easy back then. Now what you want to do is align yourself with someone who's doing it right now and be executing in this market when you're actually in this market too. Because if I've got a vested interest in this market because my own dollars are there, plus I run a business where I'm actually ethically doing the right thing and wanting the best case for you, then I'm going to be active in this market. So this experiment ended up working out quite well, not only for myself, but also to be able to share with you guys what exactly we can do and produce with our systems and proven methods. Now, I went on to say in that video that I expect 11% as the growth. I got demolished in the comment section, people messaging me as well saying, you're ridiculous, you're not going to get 11%. And I was like, hey, well look, based on our numbers, I think conservatively we'll get 11%. And these are how the numbers performed. So property 1, I purchased for $425,000. In today's value, it is now worth $480,000, meaning it went up by $55,000. If you work that out as a percentage, it's 12.9%. That is far exceeding the 11% I initially thought about. What's crazy is this purchase wasn't in Western Australia like the other 2, where it's absolutely been taking off. I wanted to go and diversify my risk because I didn't have enough exposure in this one state, being Victoria. Now, if we look at the last 12 months, Victoria's been one of the worst performing places to be actually having to go out and buy property. Prices on average have actually fallen in some locations, and some have actually grown only by a couple of percentages. In fact, in this suburb alone, the percentage growth over the last 12 months is less than 5%. However, this property grew by 12.9%. And that's testament to the fact that you can go out there, do the research and get it right. And when you do, you could be in the same suburb as someone else, but greatly outperform them. Now, the next two properties, the numbers start getting wild. Property number 2, I bought for $416,000. It is now worth $470,000, gone up by $54,000, which would equate to, again, 12.9%. But the third property, and this is by far my most special property, and I'll tell you why in a second. Not just because of the numbers, but because of the story behind it. When I looked at this property, I knew there was potential and I knew it was under market value. But I also knew the way that it was displayed, because it was an off-market deal, it just didn't present well at all. It was almost like you had to look through all of the garbage that was in those photos and say, look, if this was staged properly, you probably got it for another 30 to 40K higher. But it wasn't. It's an off-market deal. They wanted to sell. And so I actually presented this deal to 2 other clients. Both clients came back and said, no, I don't want it. Because 1, I don't like the area, or 2, I don't like the property itself. It's in such bad state, I'm probably gonna have to fix a bunch of things. So while this was all going on, the agent and our relationship with them meant that we were the first ones to get this deal. And I said, look, you know what? I'm in a position to buy. I will purchase this property now. So I went ahead and purchased this for $362,000. Now here's where it gets crazy. The property is now worth $475,000, which is an increase of $113,000, meaning the price performance has increased by 31.2%, which is absolutely unbelievable, and it was something I didn't expect. And the truth is, most people would look at that and say, well, you must have done something to the property. You must have renovated. And I can tell you now, I put in $2,000 to go fix a vanity. That's all I did. And I totally expected that at some point, something else was going to break in this property because of how it was presented. But to my surprise, none of that came up. I factored in mentally that maybe 10K is what my costs would look like in my first year, but I knew that it was severely under market and we could go in, purchase it, and I would do quite well. That's why I presented it to 2 other clients. So if you're watching this and you're one of the clients, thank you so much, because I ended up picking up that property instead. Now, if I was to look at all 3 properties, annualize those returns, I've made $222,000 in this past year, tax-free. That's equity that's increased in these properties, and that would mean an 18.5% return. Now, I would go on to say, let's disregard that final property because that is an outlier. It was a complete gem and a unicorn property. So even if we took the other 2 as an average in 2 different locations, 2 different configurations in terms of how many bedrooms, how the property was presented as well, that would mean a 12.9% capital growth. And that is just testament to the fact that we go out there and get results. At the end of the day, I can tell you whatever, but unless the product is good, unless the service does what it's supposed to do, you wouldn't be watching this video, and nor would you go ahead and book in a call, because at the end of the day, if you want results like this, then you're probably going to want it with a team that has done it time and time again. Now that's just from the capital growth perspective. I also said in the video that I was slightly negative cash flow, but I expect rental growth to be strong in these areas. And I think in the next 12 to 18 months, I should be neutral cash flow, if not positive, irrespective of if the interest rates didn't go down. Now what ended up happening was interest rates actually went up a couple of times, and despite that, today I am neutral across all 3 properties. And that's because each property has increased in rents. And those rents have increased to a point where I'm making an extra $8,000 to $10,000 per year by just holding these investment properties. Again, I haven't gone out and renovated them. I haven't done any development. I've just gone out, bought the right property in the right location at the right time. That's it. Now, do I think the gravy train ends here? No. Do I expect it to grow by another 18% next year? Yeah, probably not, but I could be surprised here. What I look at is looking at average numbers as my bear case being 5% and my more realistic case being anywhere between 7 and 11%. Because over the last 4.5 years, that's exactly what we produced. And over the last 10 years, that's pretty much what I produced for my own portfolio, closer to about 12% annually. Initially, thinking that it was going to grow by 11% would have meant $132,000 in equity growth. Instead, I got 90K extra, which means $222,000. And that means I could go out there and effectively buy 2 more properties just purely off the equity I've generated off these 3 properties. Exactly what I said was going to happen over the last 12 months. This completely exceeded it. And the reason I made this video is to just be transparent with you, show you exactly how it can work when you buy the right properties at the right time. If you're interested in a more wider breakdown of my entire portfolio, which could end up being like a 40-minute video, then you have to do two things. Number one, you've got to hit the like button. We got to get it to 1,000 likes. That's number one. And number two is you got to comment down below saying full property breakdown. If those two things get met, in the next 6 months, I will be making that video. If it gets hit tonight or next week, I will go ahead and make that video as soon as those two conditions are met. So if you know anyone and you're interested in watching that video, share this video because that's the only way we're gonna get one. I hope you guys have enjoyed this video. Again, if you need the help, contact me, contact the team, start this process and move at speed. You can go out there, try and save a couple of $1,000s, but in a market that's moving this fast, without interest rate cuts and knowing where population's headed, as well as all the buy signals, which you can find in this video, all flashing green, it'd be silly to wait and try it yourself. And worst case, you get analysis paralysis and you're out for the next 12 months. I hope you guys have enjoyed this video and I'll catch you guys in the next one. Thanks guys.